Hi guys, welcome to the Education Matrix channel because education changes everything. In today's video, we're going to talk about Jeff. This is scenario 4. Jeff is single, he has no dependents, he is not married. Jeff has 1 million dinars. And in this scenario, the Iraqi dinar revalues to 1 dinar to $1 US. Jeff already has an LLC and he wants to go into the business of property management or real estate rental. He wants to invest $750,000 in rental property and he wants to hold back $250,000 for taxes and additional expenses. Based upon 2019 tax software, Jeff would owe approximately $230,000 in taxes using his plan. This does not include state taxes. So Jeff easily will be paying approximately $250,000 to $260,000 in taxes. He calls his tax professional and explains what he wants to do. His tax professional has a fit. He explains to Jeff as calmly as he can that if he opts to finance the property rather than pay cash for it, the deductions would offset his taxes and he could owe up to $100,000 less in taxes if he follows his tax professional's advice. Here's how the tax write-offs and tax deductions would look if he follows the tax accountant's advice. And this does not include all of the tax write-offs like the internet service provider, his cell phone, software, and other shipping and other expenses that he might have. $4,000 in commission and fees, $98,000 for contract labor, $39,000 for mortgage interest, $18,000 for real estate taxes and license for the business, $4,000 for the business travel, $4,000 for online marketing, and it doesn't even include the $1,200 that he's going to owe to his tax professional for having to prepare a LLC type tax return. Plus, you have to remember, if Jeff lives in a high-income state like California or New York, the $98,000 contract labor could go up to $140,000 or $150,000. This tax return would be filed on a Schedule C as a rental property business rather than a Schedule E. And based upon the calculations from the professional tax software, Jeff would end up owing approximately $119,000 to the federal for 1 million US dollars in taxes if he does things the tax accountant way. Jeff does not have a problem with the IRS because he financed the property rather than paying cash. And the scenario, the lesson from this scenario is that just because you have the cash doesn't mean that you should pay cash. The tax write-offs and the tax deductions can lower your tax liability. If Jeff paid cash for the property, he would owe the IRS a lot more than $119,000 or $120,000. If you gained value from this video, please subscribe, please hit the bell to be notified when new videos come out.